I'm Ellen Hernandez, a tax partner at KPMG in the Philippines. Welcome to the KPMG PH Insights EOPT series, where we dissect and discuss significant tax matters that affect your life. This series aims to provide you a glimpse of KPMG's insights in the Ease of Paying Taxes or EOPT Act, how we think this may impact taxpayers, and what we hope should be addressed by the implementing rules and regulations. For this episode, we will talk about VAT provisions under the EOPT Act. And joining me is Manuel P. Salvador III, or Manny, one of our tax principals and country leader for indirect tax services in the Philippines. Hi, Manny. Glad you can join us today.
Hi, Ellen. It's certainly a pleasure being here. It's actually quite an exciting time to be a tax practitioner nowadays, given the upcoming and current changes in our laws and regulations. As you know, VAT is essentially a tax on consumption, and humans being consumptive, it's certainly going to affect the way we pay taxes in the Philippines. It's a tax that we encounter every day. So certainly, when EOPT changes the way we report and pay VAT, it will certainly affect our lives. And it will affect also the way we report and pay our taxes.
I couldn't agree more, Manny. So going through the provisions in the VAT law that is under the EOPT Act, there are various changes that I'm seeing therein. And first in line there would be the alignment of VAT recognition for VAT sale of service and goods. So if we could remember, prior to the EOPT Act, the VAT sale on goods is based on gross selling price, whereas the VAT is recognized on the sale of services based on gross receipts. Now, under the EOPT Act, we could see that both sale of goods and service will now be based on gross sales.
Yeah. I've been in this practice for a long time, and I remember a time when the issue about accrual and actual payment created a lot of confusion with a lot of taxpayers. But if you really think about it, given the changes in the EOPT, there are no significant changes with respect to the sale of goods. However, with respect to the sale of service, I would like to highlight the definition of gross sales for services under the EOPT law. And I quote, that which the purchaser pays or is obligated to pay to the seller in consideration of the sale of services that has already been rendered by the seller, the use or lease of properties that have already been supplied by the seller, excluding VAT, and those amounts earmarked for payment to third parties, or basically received as reimbursement for payment on behalf of another, which do not rebound to the benefit of the seller. So that's a very significant change.
Manny, the definition you've provided, this effectively indicates that the VAT recognition on the sale of services have shifted from cash basis to accrual basis. Imagining from the practical perspective, if taxpayers used to wait for their VAT official receipts prior to claiming the input tax, now, upon the effectivity of EOPT Act, we could say that it's a welcome change, that taxpayers would just be waiting for a single document, which, from your discussion earlier, would be the VAT invoice. Is that right?
Yeah, that's true. And it is a welcome change because, as you probably know, VAT is a very document-driven tax. Anybody who has gone through a tax audit, a refund, or simply reporting VAT will know that it requires a lot of documentation. Now, consolidating all this reporting into one document, the invoice, is actually a great move towards simplifying things. However, we have to note that that shift may still bring about a lot of issues. I have actually two in mind. One would be, for example, a taxpayer that would be undergoing the CAS, or the Computerized Accounting System accreditation, that is required whenever you want to shift from manual to a computerized accounting system. I have clients who are currently going through that sort of process, and therefore, can you imagine being caught in midstream whilst the EOPT is happening? That means they now have to consider the changes brought about by EOPT, in particular with respect to the invoice, to make sure that their computerized accounting system aligns with what the EOPT requires. So that's not an easy task. As you probably know, getting a CAS isn't that easy either, more so with the changes introduced by EOPT. No? And another significant effect, I think, of this consolidation would be, okay, so we don't have ORs anymore. No, that's no longer required for services at least. But now, remember that a lot of taxpayers may have already spent for printing official receipts. What's going to happen now to all these ORs? No? So thankfully, the EOPT law allows a taxpayer to use these unused invoices, at least until the regulations come into effect, as a primary invoice. So all you really need to do is simply stamp, instead of the word OR, you just stamp it as invoice at the time the transaction is had. And as long as the invoice has all the required information, for example, the amount of the sale, the VAT paid, the description of the services, the name of the purchaser and the seller, and all these required documents, as long as they're there, then we're okay. You can use it as a supplemental invoice. So there's no real waste. The problem, though, is that these supplemental invoices cannot be used for purposes of claiming your input VAT. So there is somewhat use to it, but quite limited in a way. But it's better than nothing at all, right?
You're right. Just tracking back or going back to your discussion on the CAS and CBA applications, I agree with you. We've seen difficulties in clients applying for that and all the process and preparation of the application. And it might be hard for certain taxpayers already to run through the application, especially now with the change from official receipts to VAT invoice. It would be considered as a major enhancement by the BIR. And from our experience, major enhancement means a reapplication of the CAS or the CBA applications. The BIR recognizes that this will take time. So from my understanding of the draft RRs, the BIR encourages their taxpayers to apply for this, and hopefully they would have available CBA and CAS applications ready by the 30th of June 2024.
Yep, that's what they hope for. Oh, additionally, I forgot to mention that a taxpayer has to submit an inventory of their unused invoices, 30 days after the effectivity of the regulation. So that's another additional requirement. But yes, following your statement, indeed, that is true. But of course, that translates to additional cost, which may not sit exactly well with a lot of our clients. Any additional cost, I think nowadays is not good. But what do you say about that?
Exactly. Taxpayers definitely have their work cut out for them.
Yeah, we appreciate the work of the legislator, especially in trying to simplify the way we pay and report the taxes. But of course, any change in regulations, more so the law, creates a lot of disruption. Thankfully, we are advisors that are here to help in that regard. You can provide you with relevant advice leading towards the actual implementation of the law. So it's a disruptive time, but there are ways to do things so that it won't be as disruptive as we would think it would be.
You're absolutely right, Manny. Now, we've gone through those changes for the invoicing requirement. So are there any other significant changes in the VAT law following EOPT?
Yeah, something new, the output VAT credit on uncollected receivables. This was not around, I think, before the EOPT. So under the EOPT Act, a seller of goods and services may deduct the output VAT pertaining to the uncollected receivables on the next quarter. So after the lapse of the agreed upon period between the buyer and the seller, of course, to pay, and on the condition that the seller has fully paid the VAT, and two, that the VAT component of the receivables have not been claimed as a deduction, then you can actually claim a credit on uncollected receivables. So that's a significant change, I think, that needs to be mentioned.
So you did mention uncollected receivables. So I've also had a chance to go through the RR, the draft RR rather. And from my understanding, there will already be a credit term. Credit term would be important. And it could be based on, from my understanding, it could be based on either the credit term written in the invoice or any other documents that a taxpayer may show to prove that the credit term has lapsed, and thus it may now use the output VAT as tax credits. And the important thing here would be the crediting of the output tax following the lapse of the credit term will be done on the next quarter, which you did mention in your previous statement. This means that sellers must establish an efficient way of monitoring their sales on credits and when it becomes due, so that they can be able to determine which may be used as output VAT credits. Now, the thing is, now large taxpayers may have such mechanism to monitor these credit terms, but the small and medium taxpayers may have concerns on this.
Yeah, well, certainly, when this rolls out, everybody will be affected, not just large taxpayers. But fortunately, firms like ourselves, like KPMG, we can actually assist in things like bookkeeping or maybe even developing a system tailor-made for these other taxpayers, among others, to better monitor your financial transactions. So we're here to help. Yeah.
Agree. Well, still on this concept of output VAT credit, since this is one of the new ones in the EOPT Act, what if I have an uncollected receivables from sale of goods as of the effectivity of the regulations? Will I be able, as a taxpayer, to use it as an output VAT credit?
Very good question. Unfortunately, my answer there would be no. And the reason for that is the draft RR states that the output tax credit mechanism shall only apply to transactions that transpired upon the effectivity of the regulation. So if it happened before that, when the regulations were not in effect, then you cannot validly claim the output tax credit in that scenario. So sadly, no.
Okay, so that's for the sale of goods. On the other hand, the output tax on billed but uncollected service fees should be declared in the immediate taxable quarter following the effectivity of the regulations. Sellers are also required to replace the billing statements or statement of accounts that they've issued with VAT invoices. VAT discussions will not be complete without invoicing requirements. So are there any notable changes on the list of invoicing requirements of business style, for example?
Thankfully, yes, no? Because the complaint with VAT before was always a complaint of form versus substance. When there was a mistake in the form, then it usually meant a failure in terms of claiming the input tax credit or claiming a refund. But thankfully, the EOPT has introduced changes that will not make that happen. So previously, as a good example, sales amounting to at least 1,000 pesos has to be evidenced by a sales invoice or OR. No, that was the old rule and had to contain the purchaser's business time, among other things. No? Under the EOPT, this is no longer the case. In fact, there's another provision stating that the VAT shall still be allowed to be used as an input tax credit on the part of the purchaser if the VAT invoice contains the following. Number 1, amount of sales. So these are very basic. Number 2, the amount of VAT. Number 3, the name and PIN of both the purchaser and the seller. Number 4, the description of the goods and nature of services. And number 5, date of the transaction. Whereas back in the day, if you missed the address of the seller, then that's it, no? But now we don't have those fatal errors anymore, no? So even if the business style, for example, and address of the purchaser are not indicated in the VAT invoice, the same will be considered valid to support an input tax credit. That's a good thing, right? However, it isn't a get out of jail card for free card, because it should be noted that the VAT registered taxpayer who issues a VAT invoice which lacks the information, the 5 that I mentioned, that are required by the BIR under the EOPT, this shall still be liable for non-compliance, which will most likely result in the imposition of compromise penalties. But if you ask me, between a compromise penalty and the ability to be able to claim it as an input VAT credit, I would take the latter, don't you think? No? And I think the change recognized the common plight of purchasers, that they have no control over how the supplier issues invoices. So you're basically at the mercy of the supplier. So now what will happen is it's the supplier now that will get penalized, no longer the purchaser. And that means that the purchaser, despite the error of the seller, will be able to claim the input VAT nevertheless. So that's actually a very good thing.
Yes. So actually, from what you've stated, Manny, I could honestly say that our invoices are quite infamous globally for containing quite a few information. So, with the enactment of the EOPT Act, are we going to expect a significant decrease in the information that VAT invoices should contain? This does not seem to be the case under the draft RR, but maybe the BIR will consider to further the essence of easing the payment of taxes.
Yeah, I know what you mean. It's like same dog, different color, no, is what you're saying. But actually, it's a very welcome development, no? So, yeah, maybe the same number of documents, but certainly if you take a look at it, there are features in the EOPT that definitely make things live for a VAT taxpayer. So, what can we do now? No, we can firstly, before the issuance of the draft regulations, what we can do is participate in the policy making and to stay informed. No, we can have discussions based on the EOPT Act and maybe also involve ourselves in the drafting of the regulations, which I think are still ongoing, in terms of having to participate in public consultations. That is until the IRR is issued. It would be best for taxpayers to approach their tax advisors, basically, or maybe the BIR, where they're registered, to clarify which rules are applicable in the interim.
Definitely. So even after the IRRs are issued, taxpayers will definitely be raising more questions. So we just have to wait and see how these will all pan out. Now, unfortunately, that's all the time we have today, Manny. Thank you for tuning in to KPMG PH Insights EOPT series. Stay tuned for our last episode covering discussions on VAT refund.
And remember to subscribe to stay updated.